Hi, this is Vipin, and let's start the introduction of goods and services tax. So, what is goods and services tax? What is GST? So, GST stands for Goods and Services Tax, and it is an integrated or amalgamated version of all indirect taxes in the country. So, let us briefly understand what are all the taxes which are getting amalgamated. So, at central level, we have excise duty, which is the main tax which got amalgamated to GST, then service tax, countervailing duty, then central sales tax, and all those things. At state level, we had VAT, entertainment tax, entry tax, and other state cesses and surcharges. So now we'll briefly learn how the same got introduced. So the journey of GST in India, though the key milestones started appearing in 2008, but way back in 2003 itself, the Kelkar task force suggested a single tax legislation to take India to the next level, that is to make India business friendly, or in other words, to improve the ease of doing business. So in 2017, GST got introduced, and let us briefly understand the threshold limits in this. So the threshold limits are nothing but the limit after which the taxes gets applicable. That is, now let us say if a person is selling goods, then from 0 to 39 lakhs he need not pay GST. So after 40 lakhs he should start paying GST. So for services it is 20 lakhs. So up to 0 to 19 lakhs he need not pay, and after that it starts applying. So after that the entire tax will apply. So now let us say a person is surrendering both goods and services. So which is the limit which applies? So it is 20 lakhs. So after 20 lakhs he has to register. Registration details we'll go through in much a deep dive sessions later. We'll understand the areas where which is kept intentionally out of GST. One is petroleum products such as diesel, petrol, and LPG products, and the other one is alcohol for human consumption. Obviously, these are done so that the revenue can be retained by the states. Now, let us understand the brief structure of GST implementation. So IGST is for interstate movement of goods. From CGST, UTGST and SGST, these are for intra-state movement. So that is within the state movement of goods and rendering of services. So UTGST is mainly for union territory. So now we'll understand by an example. Let us say goods are traveling from Maharashtra to Tamil Nadu. So what will be the tax applicable? It is IGST. Now let us say goods are traveling within Tamil Nadu. What will be the state tax applicable? It is central GST plus state GST. So for the time being, we'll take an example of 18% rate of goods. So IGST at 18%. So CGST and SGST will be 9% plus 9% as revenue is shared between central and state governments. So now let us say where UTGST will be applicable. So it is applicable where union territory is prevailing. That is Delhi, Chandigarh, Pondicherry, Mahe and other places. So there when goods are sold within their state, UTGST will start applying. So this is applicable not only for Delhi, Chandigarh, it is for all union territories. I'll briefly slow down here a bit so that we can understand the broad structure of GST as it is a significant change. If you all recall, Central Sales Tax Act was governing all interstate taxation of goods, and Service Tax Act was governing the services rendered across state and within the state. this is a significant change. GST has been structured in a way that essential services and food items are placed in lower tax brackets, while luxury services and products have been placed in the higher tax brackets. So the GST Council has fitted over 1300 goods and 500 services under four tax slabs of 5%, 12%, 18%, and 28% under GST. This is aside the tax on goods which is kept separately, like gold, which is at 3%, and roughly polished precious and semi-precious stones at 0.25%. So this can be learned separately in the future episodes. So in total of 81% of all goods and services fall below or in the 18% tax slab. So all essential commodities and other things will fall below or at the 18% tax slabs, and close to only 19% of the items will fall at the highest slab of 28% category. So these are basically sin products or luxury products in 28%, such as chewing gum, BD, molasses, and chocolates, deodorants, shaving creams, and air conditioners, and things like that. So these are all products which are not so essential but are discretionary in nature. So thank you for learning with me today, and let us see in the future classes. So in the future classes, we'll be learning the cascading effect and how GST claims to reduce prices and some basic other stuffs as a foundation. Thank you and have a nice day. Bye.